Mayuresh also joins us on the show right now. Mayuresh, is it time to relook at PSUs or too early, or what's the case? How should one, look at the entire PSU pack at the moment?
Afternoon, Anisha. No, I think when you're talking about the PSU pack, I think there are a whole host of sectors that get covered. So within the sectors, obviously, how upstream companies will perform will depend on crude pricing primarily. Downstream companies, again, dependent a large portion in terms of how GRM margins will get spread out. What probably happens in terms of crude pricing as well, and the transmission volumes thereof in lieu of expected demand. When you're talking about the defense enterprises, I think a lot of them have corrected from the recent highs in the last 2 months. But there are obviously a lot of tailwinds for the entire PSU defense to PSU power pack in terms of government initiatives, in terms of the capex spends that the government is expected to do in both these sectors incrementally as well. And therefore, I think expectations of strong order books expected to continue building on. Execution has been pretty stable so far. The orders are coming with pretty decent margins as well. And therefore, the only risk that probably happens for these two sectors will be the execution risk, if any, which might pull down estimated annualized earnings and therefore derate the forward multiples, if any, in that scenario. PSU banks, again, selectively, the whole scenario impact that you're probably talking about in terms of deposit mobilization and the issues that the industry is facing thereof. Obviously, I think that's going to create some elements of upheavals in terms of the overall advances deposit ratio as far as the system is concerned. But this should get normalized at some point of time. Obviously, I think the entire exercise over the past few quarters where GNPs, net NPs have come down quite significantly. A few of the banks also have decent capital adequacy, specifically tier 1 ratios at this juncture. And though I think CASA might be a little bit subdued, at least over the next couple of quarters, normalization will happen as we go ahead. Obviously, with rate cuts around the corner in the Indian context as well, there is some element of sanity that can get built up, even if they have to probably adjust a little bit in terms of their advanced deposit ratios as well. So to that extent, I think PSU banks, from a valuation perspective, also look attractively placed. We continue holding stocks like a Bank of Maharashtra and a State Bank in our global portfolios.
Okay, that's that on banks right now. But just taking cues from CLSA's latest note on urban consumption. In fact, if we have Jinay perhaps with us to walk us through what that note entails. But it's really picking up on the trend of the kind of high demand that one has been seeing for some of the concerts of late. 3 Coldplay shows, they sold out pretty quickly, each of them with over 50,000 tickets and an average price of $75. Diljit Dosanjh as well, all sold out, 2.5 lakh tickets, average price $90. And concerts for Dua Lipa as well as Bryan Adams as well are fully booked out. So kind of giving you a sense of the kind of urban consumption trends, while there were question marks being raised about the K-shaped recovery since COVID and whether the premiumization trend is going to stay or not, and whether urban India is going to continue to shell out for their whims and fancies. Clearly seems to be the case that they will. But Mayuresh, on the cusp of the festive season as well, which sector do you think is going to come back strongest?
So Aisha, again, I think afternoon to you as well. I think apparel makers will continue to hog the limelight. And obviously, I think you're seeing some element of respite happening in terms of input costs for apparel makers as well. So I think with the wedding season also expected to be in a full-blown proportion along with the festivities that are coming through in the next few weeks and months. I think apparel makers is something that might be something to watch out for. So you've already seen humongous moves in a stock like Trend. Aditya Birla Fashion, you're probably looking at Raymond Lifestyle, which is expected to do well as well as expectations of stocks like Manyavar as well. Obviously, I think the gold and jewelry stocks also have done reasonably well. But again, I think from a discretionary spending perspective, these QSR players should come back strongly as well. Second half always is relatively better for these QSR spaces. A lot of management commentaries are hinting to the entire perspective of having a very asset-light model as they are branching out in tier 2, tier 3 cities as well. And therefore, the expectations in terms of expansion of operations in an asset-light mode, expectations of volumes coming back in a steady fashion, input costs remaining far more stable at this juncture, and far more solid SSG growth or volume growth expected these QSR players can also probably have the same. So I think apparel makers, pure jewelry counter, and QSR, I think these are good spaces in terms of consumption trends.
So those are the spaces to watch out for.
Meantime, also want to check in on some of these infra plays or capital goods themes as well. BHEL, they received another order for an EPC project from NTPC worth about 6,100 crore rupees. There was NBCC, another order from the Ministry of Health for a project in Bihar worth about 1,261 crore rupees. And then JSW Infra, which took a delivery of a dredger to support its expansion plans in Netherlands. So that's another stock which is going to be in focus as well. Mayuresh, do you think theme in the market is not perhaps capex anymore, because that was well discovered and ran up as well pretty hard, and now the whole focus has shift to energy transition?
So, Aisha, energy transition will remain a theme. And I think the structural aspects in terms of getting renewable energy to that 500 gigawatt target from almost 180 to 100 will mean serious amount of capex from the government. And therefore, I think solar, wind, and hydro are going to be the key facets in terms of this huge expansion that will happen. Obviously, I think as this expansion happens, you are going to see your EPC players also benefit quite significantly from this entire transition, as well as the power financiers as well. So to that extent, this entire power ecosystem should continue doing well with the kind of demand that is expected to ramp up over the next few years as far as India's context is concerned, in terms of both supplying power and expectations in terms of power reaching every village in our country. A large belief would be how power tariffs will probably play out. And therefore, I think looking at how energy needs will play out, I think this entire power ecosystem can report stable earnings. Stable numbers at least for the next.
The earnings are expected to be steady and stable given the kind of context, some of this energy transition theme and the stock.
But Mayuresh, just wanted your sense on how you're, valuing Zomato right now, especially in light of the other peer, that's Swiggy's IPO in the pipeline.
Yeah, there's solid demand in terms of Swiggy's unlisted shares as well, Aisha, at this juncture. And look at the raise that Zepto has done in the recent past as well. I think they've been on a raising spree. And therefore, I think all these players are expected to benefit quite significantly in terms of the transformation that we're seeing, not just in urban India, but also semi-urban India as well. And therefore, I think the entire mechanism in terms of Zomato's key verticals, when it comes to Blinkit, when it probably comes to their hyperpure business and their core food delivery business as well. All three businesses should start firing as per the management on all cylinders as we head into the next few quarters. And therefore, earnings should have a strong fillip as we head over into the next year and the next couple of years as well. So I think two things. One, I think from a price action perspective, a large part of the price move has probably happened as far as Zomato is concerned. The second element, obviously, is expectations in terms of when Blinkit will start coming into profitability. I think the management believes over the next 2 to 3 quarters. And as that happens, I think that transitionary phase will also have the belief that the kind of transactions that are happening onto the platform will only keep on increasing from the trends that we are probably witnessing. So yeah, anybody holding on to a stock like Zomato can continue.